So these are some three messages, and I would like that we start with the panels now, and I would like to introduce our first panel. We have called it Global Perspectives of Impact Investing and Triple Bottom Line. Here comes the expert already, but this is the panel. Doesn't matter. This is the panel that will discuss the definition. So please come and feel free to ask. Mr. Robert Rubinstein, the chairman and founding partner of the TBLI Group, is the authority here, and I'm sure he and the panelists will give us a great time. Then we have Ms. Nilufer Aktas. Nilufer is the director in the Turk Economy Bank from the Angel Investment Platform. Ms. Yvette Go from the European Investment Fund from Luxembourg. Yvette is the head of social and environmental impact in the EAF and very active in the FPA and other institutions. And the Authority for Impact for Social Economy, the Ashoka, Ms. Zeynep Meydanoglu. She is the country director of Ashoka, and she has joined us for the panel. So I wish a good panel, and let's start.
Thank you very much for organizing this to WBAF, and also thank you for having the wisdom to choose the most interesting panel. Before we start, just for those who are not familiar with TBLI, my wife likes to say, we make dreams come true, but we're not in cosmetics. Our work is mainly educating asset owners and managers about sustainable investment, liquid and illiquid, and we've been doing that for 20 years. And basically changing the behavior of the financial sector, because there is no group more predictable than the financial sector. They all run up the hill and off the cliff at the same time. It's a bunch of alpha males who are very much in hunting mode. But the work that we are doing is farming, and it takes time. It doesn't mean that it doesn't perform. We have a lot of myths about impact, that it's money losing, there are no deals, there's no management, there's no exits, and there's no scale. But if we look at the myths of the financial sector, where hedge funds say we always get 30% return, which is a lie. Private equity firms say they get 25% every year, year in, year out, which is a lie. And they forget that the products that they were selling, like sovereign debt, collateralized debt obligations, and other products all failed. So it's kind of comical that they say that impact investing is very risky when the financial sector has paid over $300 billion in legal fees and fines doing the risky things they did before the crisis. So I want to start, before I start with the panel, how many of you actually know what impact investing is? Okay, so you all think you know what it is. Okay, that's good. So I'd like to start with you. Your background is hardcore hunter, financial predator, who is now kind of recovering banker, trying to mobilize money in the impact investing space, correct?
Exactly.
Okay, how's that going?
We are just in the beginning, I'm not sure. Yeah, that's okay now?
Yeah.
Actually, we are kind of at the beginning stage of what we are intending to do. So just a brief description of what I do. I'm coming from Turkish Economy Bank. I'm heading the Angel Investment Advisory Services and Business Development. So today my role will be to explain you or try to explain you the observation that we made for the recent years, that angels have started to have an interest, a very serious interest in impact investment. We see this because we have connections with them, and so that we can listen to them and understand that they have an interest on that agenda. So we think as a bank we have a role to fulfill here, because we have connections with this smart money, and if we can mobilize this smart money to impact investment, it would be overall having an impact to the whole economy. But as I told you, we are are really in the beginning, and to be honest, we don't know how to detect an impact investment or how to detect a social entrepreneur. So we need help. We realize that. So we are planning to partner with Ashoka in the coming years as well, so that we can go work together to define a very good impact investment opportunity for our clients. So that is basically my role. Coming months, transferring myself from a shark private banker to someone trying to do good for the whole society as a whole.
Okay. Yvette, if you can press that button. Yeah, okay. So another predator, pirate, hunter, who with 20 years experience, who is now trying to mobilize actually a lot of money from the EIF, the European Investment Fund, to stimulate more money going into the impact space. What has been your reaction to the reception that you've gotten?
Well, thank you very much, Robert. So perhaps I suppose most people will have heard of European Investment Fund, but just for those who have not, we are the institution that actually provides financing to SMEs through equity investments or guarantees and securities on behalf of the European Union. And of course, impact must be a major topic on our agenda because we have a policy mission to guide our investments. And now we have, indeed, as Robert mentioned, we have at the moment 430 million of investment capacity dedicated... Euros, sorry, what did I say? 430 million euros in dedicated mandates dedicated to impact. And I don't know if we get into impact. For us, impact means creating the intentionality. So when you make an investment thesis and make investments, it's not just about financial returns, but also setting impact targets. For us, that's the distinction between impact investment and not impact investment. So I think we have a lot of work to do. We started with an original, the standard products that we have is a fund-of-fund investment, so investment in social impact funds, in the social impact accelerator. And we actually realized, and that's part, I think, also of this panel, that there are some of the earliest stages of companies that are not so easily addressed through classical venture capital type structures, even focused on social impact, which is why we created 3 new instruments, 2 of which are really focused on, dedicated on the earlier stages. And one of them is focused specifically on co-investment alongside impact-focused business angels. So if you are interested in making impact investments as a business angel, please approach us. I'm saying us because I'm here together with my colleague Cyril Guifes, who's there on the backside. He will be speaking at 2 o'clock, and then he'll tell you more in detail about the different instruments. But I think there's a lot to do for us, but we are very excited to help encourage this space with our financing tools.
So now if you can press the button also. So you're the only non-profit here. You're the hunter, the farmer here.
The farmer, I love that.
What are the challenges you face? Because you told me your definition of impact is not market rate return.
Below market. Only.
Not only, okay.
Yeah, so I guess sitting on this panel, I'm the most social impact oriented actor as Ashoka, I would say. And we just... maybe I can say a word about Ashoka and then where we come from, and it will make more sense. So we are one of the leading global networks of social entrepreneurs. We've been around for quite a while. So we are known to have coined the term social entrepreneur about 30 years ago. And we've supported social entrepreneurs like Paul Rice of Fairtrade, Jimmy Wales of Wikipedia, Kailesh Satyarthi of Rugmark. We've supported them from early stages, from pilot stage to global scale, through a little bit of startup finance, pro bono consultancies, and a global network. And for us, impact investing is very, very interesting. However, it's not just about market rate returns. At the very least, it's not philanthropy, definitely. However, we are open to, at the very least, getting the investment back, patient capital type investments, and we are wary of pushing social entrepreneurs to deliver market compatible returns, because that often has the danger of creating a mission creep, of giving up some social impact in order to be more investable. So we see impact investing as a very, very powerful tool. However, for us, it's a tool, it's a means to an end, which is maximizing social impact. So we always come from the side which advises social entrepreneurs to optimize profits while maximizing impact. You can also say maximize profits and maximize your impact. However, that's according to our field experience, it's rare cases. Very sweet, the cherry on the top, but not always the best scenario.
So your experience has been that you cannot achieve market rate return? And
you can, but it's very rare cases. So right now, for example, I know the social entrepreneurs in Turkey inside out. So it can go hand in hand. We see it like different shades of the same color, all the beautiful color, but because we want them to maximize their social impact, and that's where our interest lies. If at that time they are not able to give market compatible returns, we don't want to push them too much in that direction.
Okay.
So,
but in your case, you're a regulated bank.
Yeah.
You've got most of the people working now are in compliance.
Yeah.
Very few actual people doing any work, just compliance, trying to follow the rules. The rules won't let you invest in projects that have high social impact without market rate return. So how do you mobilize money if your clients are interested but your boss says no?
Yeah. First of all, in the beginning, we are not going to act as an institution to launch new financial products for the clients. In the beginning, our role will be more like to open this world to the clients who are already interested in making some early stage investments because they are angels or because, I don't know, because of their business perspectives. But they are also considering impact in their portfolio. So first of all, we want to be their gate opener. We want to show them that it's possible, but for that they need to understand how to detect a good social entrepreneur, because due to our experience, we know that angels most of the time are very keen on the team. So like when they are doing a normal angel investment a transaction, when they are looking to impact, they will be very interested in the team itself. But there are some nuances between a normal entrepreneur and a social entrepreneur. So in that sense, for example, Ashoka can put too much on the table for us and for our clients to understand the difference between an entrepreneur and a social entrepreneur. The difference will be, of course, as Yvette mentioned, the intentionality factor. But when it comes to the real execution, there must be a methodology behind it. We are trying to seek that methodology, a simple way for our clients to understand, because not us, not Turkish Economy Bank, but our partner BNP Paribas, due to its exposure to philanthropy for so many years, they know that there is this impact trend coming very strong through philanthropy as well. So they did this small questionnaire among their clients, and they find, for example, if I may just from the client's perspective, maybe I can share what they think. So those are the words of the clients who are interested. Sorry about that. Let me find. Actually, kind of like most of them say that they want to invest, but
it's very easy to say.
Yeah, they don't know how to.
It doesn't cost anything. Everybody will say, if you ask them, do you want a financial return and a social environmental added value? No one will say, no, I want all my money to make life miserable for everybody. No one thinks like that. So these surveys I find rather meaningless because it's about money flows. Always open the kimono, see what's there, where the money is going, and why does it matter that it's intentionality or not? If the room is cleaned up, if your child cleans the room by accident, does it mean that it's not a clean room?
But it's very important to maybe understand the client, but also it's very important for letting the client to understand his or her profile. The problem is that most of the clients, as long as we know, still for example, cannot detect what kind of an impact they want to do. Is it an environmental impact? Is it a social impact? So sometimes it's very good to map their profiles and to help them understand.
But that's an educational process.
Exactly. But I'm telling you, at the moment, as a bank, as Turkish economy, we want to first let this smart money understand that there is a methodology behind impact investment. It's not about only the intentionality. It's also because they are going to be looking for market rate returns as well.
Yeah,
sometimes above market rate
returns. There's a pretense of a methodology. Exactly. I'm sorry, because I've seen a lot of the measurement systems. Some of them don't even use stakeholder engagement as a model for determining if it's a successful impact project. Yvette, I'm just curious, what are your returns that you have to give or have to show to the bosses at B in Brussels or Luxembourg?
I would say it depends. So like I mentioned, for us, intentionality is important. And the reason why intentionality is important, because if you don't set at the outset your metric or your parameters or the impact you want to achieve, and you check as you go along in your investment lifetime whether you are actually approaching and hopefully reaching those targets, then you have a risk of it just being window dressing, right?
Okay.
So that's why intentionality is very important. Basically, for us, it's interesting because we believe I can tell more about why we believe that. But we believe there's there can be a positive correlation between financial and societal returns. And basically, through our investments, it is also something where we agglomerate the results, and we would like to see whether that thesis is being proven. It doesn't mean that all impact investment could create financial, but it means that you can if you make right investment decisions, you could create a portfolio that.
But what financial returns do you need to achieve?
And what financial returns do we need to achieve? I know that's a key question you'd want to answer.
These are investors. They're not investing to lose money.
It depends. Yeah, it depends. No, we are not either. So let's say it that way. We have different mandates. I'll be honest about that. So, for instance, with the European Commission, for us, it's important that there are positive financial returns, and there's no specific hurdle defined.
Oh, okay.
With the Social Impact Accelerator, which we have put into the market as being a more sort of commercial instrument, we have set our portfolio barrier at 7%. That doesn't mean that every individual transaction needs to meet that hurdle. That means that over our portfolio, we would have to meet that hurdle. That's our target. However, like we said, when we assess an investment proposal, we look at whether we consider it impact investment or not, whether it would qualify for one of these mandates. And basically, so it's a bit of a range of financial expectations, but it would always have to be for positive financial returns, let's say it that way.
One of the complaints that I hear from investors, irresponsible investors or responsible investors, I prefer to work with irresponsible investors and criminals because they have more money. So one of the things is you are speaking loudly in Chinese to someone who speaks Turkish. You are not speaking their language. You have no idea about their targets, their benchmarks, and you're talking about the moral imperative when if they don't achieve their benchmark, they're fired. But they could have achieved the moral imperative. So how do you understand that?
You mean kind of playing an intermediary role?
No, do you understand the hot button, or what drives investors? What they need to achieve, whether it's a fund manager or a bank or an individual investor, because you're pushing the moral imperative, the social enterprise issue, improving.
Ladies and gentlemen, just a second. Mr. Deputy Prime Minister of Turkey, just to say hello to you.
Hello.
Mr. Minister, do you support women entrepreneurs?
That's okay. Come take a seat and you can support us.
Yes, that's what happened. Easier.
Okay,
Thank
good.
You.
So Zeynep, because it's a very big issue. I speak to a lot of people from the nonprofit side. They don't get it. They do not understand how to communicate to investors.
Yeah, I think it's a cultivation issue, and I think if we sit, I mean, let's say 10 years from now at the World Business Angels Forum, I'm very confident this will not be a special track. On each track, we will be talking about social and environmental impact. And you're already seeing the pioneers from the investment field as well, like BlackRock CEO, $6 trillion investment firm, saying don't come to us if you don't have social, environmental, positive impact. So right now we are just talking about it, but pretty soon this is going to become mainstream. So that's one thing. The other thing is some investors maybe they will not be impact investors. And it's about cultivation on both sides, both the supply and the demand, I think. And I think social enterprises as well, we need to be self-critical about how we approach investors, how we talk about finance, and kind of both sides trying to see into each other's world. So it's tedious work. That's why I love how you said farming. It's not even from year to year. You are thinking very long term. But I think as Ashoka, we believe it comes down to people and it comes down to cultivation.
Yvette, I wanted to ask you come from there billions and billions at the EIF and the EIB to invest. So why is it that most people think impact investing is a smiling child in Tanzania drinking milk? That is the only form of impact investment. And why is not public transport infrastructure, which is a $2.3 trillion investment per year around the world, low to zero carbon, no volatility, steady cash flow, why is that not an impact investment?
Well, I guess that's where you put the limits of your definition of impact investment.
Yes.
Absolutely. And so the reason why we've created impact investment as a separate pocket here is because we believe it deserves intention. Actually, by the way, I'm really happy to hear what Susanna says. Our vision is as well that actually all investment should be impact.
Agreed.
And I think it is about like I said, it's still about people's intentionality, and not that people do not create a societal impact by accident, but really because they intend to do so. So any investment you make can be impact investment if you think about upfront what you're trying to achieve with your investment. Is public infrastructure, of course, you could call it impact investment. I guess it's how narrow you set your limits. So definition of impact investment, for us, it wouldn't qualify our definition of impact investment, but obviously it's public money that needs to be spent responsibly. Mm-hmm. So if it wouldn't have a positive societal impact in some way, I don't think we should be doing it as a public institution. There was one more thing I wanted to react towards in terms of maybe the communication barrier that you were referring to coming from non-profit. Again, perhaps this afternoon we'll see a little bit more about that. But what might be interesting is that for people who are in the non-profit side and feel they do not know how to communicate with the investment world, we do get a lot of, as EIF, we talk with a lot of new teams actually. They are typically composed of a composition of people with one person who has investment experience, one person who comes from the non-profit sector, one person who has like entrepreneurial experience. And typically what we think are the most promising, propositions in terms of impact investment is if you combine all these fields together, because you'll need to have all of them. So that would be maybe a way of trying to find a communication partner and then putting those skills together.
There was one question, but I did want to ask Nilofer. This intentionality. Most of the family businesses in Turkey, the way they run it was also focused a lot on social impact, but they didn't call it impact. They just call it, that's how we do business.
Exactly, you're very right.
So that has nothing to do with intentionality. This is just how they were raised.
Inherently, yeah.
So why can't they be, even though they never called it impact investing, why can't their activity be called impact?
I think it can be called impact. So I really do not want to limit, like you had said, by the definition, because when you think about it, impact is like, all investments needs to be sustainable, right? In the long term. So to secure the sustainability issue, the intentionality or the impact is always inherent in the investment nature in itself. So when you're making an investment, you don't have to call it impact, but if you want it to, be sustainable and, profitable in the long term, you need to think about it social and, environmental naturally. So this is what you're referring to, I guess. So being a good businessman, being a good person and a businessman, in the end makes you an impact investor because you care about those things, right? So yes, especially in emerging countries, it's interesting because due to some reports again, and especially to the entrepreneurship report, this impact issue is too much taken seriously, and it's proven by the numbers as well in the emerging countries like Turkey, like Middle East, and also some parts of the North America as well. So it's very interesting. It's not the developed countries who put too much focus on the impact right now. It's the emerging countries.
No, it's the developing countries. They talk a lot, but they don't write many checks.
Yeah.
So the ones that are talking the most, they're often doing the least, and the ones that are talking the least, they're doing the most.
Exactly.
So it's important to follow the money. I have to wrap up. So what can this audience do to help all of you?
Excuse me, can I just interrupt?
No.
If there are any questions from the audience, we will allow, we have 5 more minutes,
Okay.
so please.
None? Okay. What can the audience do to help you?
Start from here. Okay. Just wanted to ask how many of you in the audience have made a donation in the last year? Okay, a lot. How about an investment? Kind of managing your own? Perfect. So I would say just to play around with the idea that they both. So you make the donation for the social impact. You have no intention of getting it back. So you're okay with losing the whole money just for the social impact. But on the investment side, you probably didn't have much information about the social, environmental impact of it, or that wasn't the must. So I would just encourage all of you to think about it. What if the two came out of the same pocket? Is this possible? And the second, I think, ask would be that we have really great mechanisms like European Investment Bank and so on. And in Turkey, when I look at the field, I always make the analogy of making cake for getting social finance started. So we have the interested angels, we have social entrepreneurs who are mature enough to get investments, and now it's kind of time to make cake. And oftentimes to make the cake we need a catalyzer. So if any of you are interested in getting started in Turkey, tweaking mandates a little so you cover outside of EU borders and so on, come find me and Nilüfer.
Okay, Yvette?
I will continue with the third. Thank you very much, Susanna, because the third question is, who of you is currently considering to potentially make impact investments? Very good. So please, if you would like, so indeed, EIF is trying to be a catalyst in that space. If you are considering whether you can catalyze your capital by having a leveraged risk, by joining forces with the EIF, please contact us. Thank you.
Okay. Nilüfer?
As a last word, I guess. So I don't have any questions to the audience because I presume many of them are somehow angel investors or somehow equipped or engaged with this system.
Some are devil investors.
Yeah, exactly. So angel or devil, but the thing is that 96% of the world economy is now driven by SMEs, early stage companies and entrepreneurs. So if you're an angel and if you haven't still engaged with impact, actually this still makes you an impact because you're inherently or somehow, indirectly affecting the whole economy of the global economy. So maybe you can start thinking about diversifying your portfolio, putting some intentionality in it, sorry about my voice, and then it would make you a more good angel investor.
Okay. I want to thank the panel. I just want to leave you with a very short story, super short. There was a very large endowment in the Netherlands that wanted to start doing ESG and impact investing. The CEO wanted to do it, and he said, I'm not going to do it well, but I'm going to start. So he asked his wealth manager, I'd like you to start doing simple index tracking. with ESG. And the wealth manager, no, we can't do that. You're going to lose your money. So I said, okay, I'll go look for another wealth manager that can do that. And all of a sudden, that wealth manager could offer those services. So after 5 or 6 or I think it's 8 years now, the CEO said, you know, it's really very easy to do ESG and impact if you want to do it. But it's extremely hard to do if you don't want to do it. So thank you very much.